Okay, so we're going to look at Cakebox, the whole McCoy, according to Simply Wall Street. I agree, with a lot of this, but I think they're underestimating the power of Cakebox. And I'll go into my opinion after, but let's have a look. Trading at 65% below our estimate. That's what they're calling fair value. Revenue is forecast to grow 9% a year. I'm not sure that's like a good estimate because it grew 50% this year, and earnings grew by 87.5% this year. So I think that 9% is slightly off. High level of non-cash earnings. Maybe that's because they make a lot from franchisee payments. So I'm not quite sure about. Maybe it hasn't picked up on this. I'm not quite sure what they're saying here. Yeah, I don't think it actually picks it up, to be honest. But anyway, let's go back up. So they're comparing them to Naked Wines, X5, Retail, Marks and Spencer's, and Kitwave, none of which I see as competitors. I think the closest competitor is probably Greg's. Might do a comparison with them another time, possibly. Saying it's a negative that it's got a low mini market cap, which I don't think is bad. Considering its cash conversion, its revenue growth, its earnings growth, its dividend growth, its cash in the bank, I see it as a good thing. But anyway, you can see that the share price has pretty much collapsed. I invested, more or less when it floated in October 2019. I've invested steadily on the way up, and unfortunately, I didn't have so much cash here. But anyway, there's been some really good things. So they're saying that EPS misses analyst expectations, but I don't know what they're expecting. Were they expecting? I think there was some differential because of maybe they were buying some property this year and they were doing some stuff with property. But earnings and like EBITDA has been very good and revenues massively up. Net income's up 88%. Profit margin 19% compared to 15% when inflation is going up. So I think this is a very strong business. Price volatility. I don't think price is an indication of how good the business is. So I wouldn't look at this too much. I think this is a great tool, by the way, Simply Wall Street. But yeah, I'm just kind of pointing out my opinions versus theirs, I guess. So return versus industry, they're saying that the Cakebox underperformed the industry and has underperformed the market. I think that's a net positive, to be honest, because there's a lot of room for it to grow. The margin's gone from 15 to 19% we just saw, 15 to 19% in 1 year, and revenues up 50%, earnings up between 88 and 90% in 1 year. I just think it's incredible. So it's very good. 12x price to PE ratio. I think that's very good for a growth company. That's, if you think about it, if it's growing earnings at 80 to 90% and it's only got a PE of 12, then we could see, it having earnings of maybe, 10 million next year, and then another 18 million in 2 years, and then something like, it could even go up even further from 18. It could be like 30 million the following year or something. And then it could easily be worth, if it's valued at 12x of 30, then, that's quite a lot. It's 360 million. And it's a market cap of 76 at the moment. So, that's a 5-bagger right there. And that's valued at a 20x PE ratio. I think if it's growing revenue at that, it really ought to be valued at a 30x. And I have seen this even in a recession. Domino's Pizza was valued sometimes as high as 40 PE. So if it was valued at a 30x and it was returning, if it was earning 30 million, then you're talking nearly 900 million. You're talking like a massive return. They're over a 10-bagger there, 13-bagger or something like that, 12, 13-bagger. So I think it's doable. Gross margin 47%, net profit margin 19%, and it is growing. So some of these ratios are going to be more important for other companies, but I think it's not really related to Naked Wines, to be honest. But this is interesting because of the PE ratio, I guess. Like PE ratio of Naked Wines is 51x, and of Kitwave, I haven't heard of Kitwave, but I can do more research on it. That's 90x. Cakebox has only got this 12x PE ratio. So if it did go up to like 40 or 50, let's say it went to 50 and they have earnings of 30 mil, that's 1.5 million. So it's 1.5 billion it'd be valued at, which is like 20x return. And I'm only talking 3 years. I'm not saying that's going to happen, but it could. And I think if any company is going to do it, it's a company that's already growing, that's already showing that it's got fantastic returns on capital, fantastic returns on equity, fair, good value, and really strong earnings growth. Yeah, I mean, they're not valuing the PEG ratio here, but I can tell you that with a growth rate of 90% and a PE of 12, it's got a very strong profile for growth. Yeah, that's just my opinion. Of course, I'm not a financial analyst, but it's just logic. Look at what earnings have done since like 2020. They've gone from like 16 mil a year with 3 million like net earnings, and gross revenue's gone from 16 to like 40. You know, oh no, that's a that's a prediction. It's gone from 16 to 30, so it's doubled in like, what is that, 2 years? Revenue's doubled and profits have doubled. It's quite hard to do that for a big company. So the analyst forecasts that it's going to go from 32 to only 39, which would only be a 20% increase, when this year they increased it by 90%. So I think a 20% increase over 2 years, so that's probably somewhere like 8 or 9% annualized over 2 years growth, is 10x deep. It's a 10x decrease in growth rate, which I think is really unlikely. I personally think they're going to grow it somewhere between 40 and 80% for the next 3 years. So I personally think these annual analyst forecasts are very conservative. Obviously, they have to be conservative to a certain extent. So if they start saying that this company is going to grow 50% a year, people might not believe them. But yeah, I just think that it's amazing. Look at the free cash flow. I mean, it's 6 million. I mean, 4 million this year. But remember, they've bought a lot of factories and distribution units and whatnot. They're not going to be buying that every year. So I think their return on cash is only going to go up, and they might start charging more for franchisees as well. Insufficient data. So simply Wall Street is probably not, the analysts aren't focusing in on Cakebox at the moment because it's sub 100 million, which is a really small company, especially in the US. Like, no one's going to be looking at this. But I compare this to Dunkin' Donuts or to Domino's Pizza, a really growth company, McDonald's. Like, these are franchises that can grow like wildfire. I'll stop sharing my screen and give my opinion. Kind of giving my opinion throughout this, but either way, sorry if it goes a bit funny there. This is my biggest holding. I think it would take a lot for me to not be investing more in this company. I kind of try to pit this company against other companies to find a better company, to find a company that has a stronger return on cash, a stronger return on equity, bigger and fatter margins, especially the growth rates of dividends and margins. It's quite hard to find, to be honest. So if you've got a company that you think's better than Cakebox and that has a brighter future, let me know in the comments section below. Also, if you've got any comments, queries, or questions on this video or any other stocks, let me know. If there's a stock you'd like me to analyze or cover, I'll do a deeper analysis, because I know Cakebox kind of like the back of my hand. So I can do that for other stocks if you like. Let me know in the comments. Guys, if you like these videos, the best thing you could do for me would be to smash the like button on YouTube. So that just kind of shows this video to more people, which would be super helpful. And consider subscribing, because I do videos on equities, as well as investing, digital angel investing in startups, and comparing asset classes, like cryptos versus these, or property versus stocks, or things like that. And I'm doing it from my own experience as well. And you'll see in some of the videos, I'll show you kind of behind the scenes and the way I'm doing these kind of things. So I hope you enjoy these videos. Remember that knowledge is power and progress is everything. I'll see you guys in the next upcoming video. Take care.